Hi and welcome to Swissquote's Daily Market Talk. It's Thursday, April 24th. The first half of the week was full of fear and hope regarding Donald Trump and administration's announcements regarding the Fed President Jerome Powell and the international trade policies. But that optimism remains fragile. News are hectic and quite unpredictable, and the US assets and the US dollar remain under pressure. But before we go, please note that the information and the discussions that you will find in this video are not financial advice. So the first half of this week was full of fear and hope. Trump's frustration with the Fed President Jerome Powell, who wouldn't cut the interest rates because the tariffs will boost inflation in the US, and the threat of Jerome Powell being removed from his role as the Federal Reserve President weighed on sentiment at the start of this week. Jerome Powell actually got publicly attacked by the US President Donald Trump on social media, called by names such as Mr. Too Late or a major loser. Meanwhile, the IMF lowered its world growth forecast sharply down, pointing at hectic and harmful US trade policies. Equities fell on the news and the US dollar weakened. Gold, on the other hand, hit the $3,500 psychological mark on these news. Then, all of a sudden, the market mood changed as Trump said this time that he wouldn't fire Jerome Powell and he wouldn't play hardball with China, and that China will do fine, and the triple-digit tariffs that the US just imposed on Chinese imports will be pulled substantially lower. The Treasury Secretary of the US, Mr. Bessent, also acknowledged that the tariff situation with China as it stands today is unsustainable and that there would be a de-escalation in this trade war. As a result, equities rallied. The China-sensitive stocks cheered the news more than the others. Apple, for example, which has a big business and a big exposure to China, jumped nearly 10% from the week low levels to yesterday's high point, and the US dollar index actually rebounded from the lowest levels in more than 3 years, and the US 10-year yield eased after spiking above the 4.40% mark. Then again, Mr. Besson said that there are no plans to lower the Chinese tariffs unilaterally. So this is where we stand right now this Thursday morning. Trump and his administration continue to, say things that don't necessarily match from one day to the other. The investor sentiment is quite fragile. Investors don't know on what foot to dance, really. There is no clear direction in the market and there is no real news, really. Everything is so uncertain and hectic. Some news actually suggests that there is progress in some trade talks between the US and Japan, for example, and between the US and India, but overall and concretely, the Trump show continues, unfortunately. Optimism is just too fragile to call the end of the equity sell-off, and futures this morning are pointing at a negative start, both in the US and in Europe, but the selling pressure looks stronger for the US indices than the Europeans at the time I'm talking here, as we will discuss shortly as well, while the Chinese CSI 300 index is flat and Nikkei is down 1% this morning, testing the 35,000 psychological support to the downside, as the dollar yen is up, testing the 143 level after an early attempt to clear the 140 psychological support earlier this week. Meanwhile, the earnings are flowing in these days, but analysts around the world are less focused on earnings this earnings season than on the trade policies and the macroeconomic and geopolitical situation. And the market's reaction to this earnings season's earnings is very much unpredictable as well. Take Tesla, for example. The company announced a 70% slump to its net profit in the first quarter of this year and revised its forecast lower due to the rapidly evolving trade policy of the US and also the changing political sentiment with Elon Musk's too close relations with the White House and also his support for the far-right parties of other countries like Germany, for example. But Tesla jumped more than 5% yesterday, posterior to his earnings announcements and hope that Elon Musk would pull back significantly from the Doge department from May on. So I don't know if it's a good reason to buy Tesla. I personally don't think so, and even less so as the company's Optimus robots, remember, the humanoid robots that they're going to commercialize soon, will apparently be caught in the trade war between the US and China, as the company needs rare earth metals that actually come from China to build these robots, and that China is no longer willing to sell to the US as part of this trade war. So I wouldn't necessarily bet that yesterday's 5% jump in Tesla on hope that Musk would mind his own business moving forward is enough to begin a sustainable rebound in Tesla shares. Today, Alphabet will be releasing its own earnings after the bell. The revenue from the company's cloud segment will be particularly in focus for AI investors. And speaking of AI, very rapidly, Nvidia managed to jump past the $100 per share psychological level yesterday after spending 2 trading sessions below the psychological level this week. Now, I believe that good news from the White House and Trump administration will have a bigger impact on investor sentiment than earnings themselves this earnings season, because the ratio of positive to negative comments on macroeconomic conditions has actually dropped below average so far this earnings season, unsurprisingly, and is on track for the worst proportion since 2009, according to Bank of America, which is not surprising, obviously, due to the trade tensions and the tariff uncertainty. But across the pond, sentiment improves faster this week than in the US. The Stoxx 600 index remained pretty and relatively stable at the start of this week compared to the American indices, and the index, the Stoxx 600 index, jumped 1.82% yesterday on potential improvement in global trade situation. On the earnings front here, while the European luxury good makers didn't have a strong first quarter this year, but SAP, which is the most valuable European company by market cap right now, announced a 58% increase to its profit last quarter, with a 26% jump to its revenue from cloud products. So the share price jumped more than 10% yesterday after the earnings announcement, and overall, the preference for the European companies and the European stock indices continues as the US exceptional trade is fading gently. The same is true for the euro, mind you. The euro dollar eased this week after trading above the 115 psychological mark. Now, yesterday, softer than expected PMI figures from the Eurozone countries certainly weighing on expectations that the massive government spending would boost growth across the euro area, but they also fueled expectations that the European Central Bank will continue to cut the interest rates to give support to the underlying European economies as Donald Trump watches on with envy. As such, the price pullbacks remain interesting opportunities to strengthen long positions in favor of the single currency, with the next major target for the euro bull standing at the 120 psychological level. In the energy space, crude oil's positive momentum was hit at yesterday's trading session by the IMF's sharp downside revision to global growth forecast. Obviously, that's not good news for crude oil bulls. The outlook here remains comfortably negative, mind you, on the back of higher global supply and lower demand prospects. Expect actually to see some solid resistance to the latest rebound in crude oil prices, approaching the $66.70, $67 per barrel level for the US crude, including the major 38.2% Fibonacci retracement on the first quarter decline and the 50-day moving average below this price range. Crude oil, the US crude, will remain in the bearish trend with the possibility of a sustained decline below the $60 per barrel level. So this is all for this Thursday. I'm Ipek Ozkardeskaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on our WhatsApp channel, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.